All right, welcome to Talk Tickers. Today we're digging into Natural Resource Partners, or NRP, and their Q2 2025 earnings call. We're going to break down the numbers, what management's thinking, and then wrap it all up with our own analyst rating and a prediction for what's next. So let's get right into it.
So right off the bat, we've got a real puzzle on our hands. The whole story of NRP's quarter really boils down to this one question. You have the company's own president, Craig Nunez, saying on the earnings call that the market for their stuff, we're talking coal and soda ash, is, and I'm quoting here, as negative as it's ever been. Ouch. But then you look at their results, and it's a totally different picture. So what's going on here? How on earth did they manage that?
Okay, so to really get what happened, you got to look at the top line versus the bottom line. Because believe me, on the surface, these numbers just don't seem to add up. And here it is, the big contradiction right in front of us. Look at the left side. Revenue is down almost 24% from last year. Okay, that makes sense, right? The market's terrible. But then you look at the right side. Earnings per share, it's up 10%. How does that happen? This right here, this disconnect is the whole story.
So where did this magic come from? Well, it all starts to make sense when you look past the headlines and at the cash flow. The company churned out $46.3 million in free cash flow. That is just a huge number considering how bad the market is. You throw in a super low leverage ratio of just half a turn, and suddenly the market's quiet little nod of approval, that small stock bump, it all makes perfect sense.
Okay, so how did they do it? How do you print that much cash in a storm? Well, the secret sauce is in their business model. It's built from the ground up to be a resilient cash flow engine, and it really shows its strength when times get tough.
Let's just stare at this number for a second. $46.3 million. Management made it super clear on the call. This was no accident. Think about it. They pulled this off while the guys actually digging the stuff out of the ground were barely breaking even. I mean, prices were at or near the cost of production. And that right there is where NRP's model is just brilliant. And you don't have to take my word for it. Listen to what Craig Nunez, the COO, had to say. He basically said, hey, this was the plan all along. For a decade, they've been working to build a company that could generate a ton of cash no matter what commodity prices were doing, up or down. And this quarter, well, he sees it as proof that the plan is working.
So how does this actually work? It's all about their royalty model, which is a really smart, low-risk way to play this game. See, NRP isn't the one with the big trucks and shovels. They don't operate the mines. They're more like a landlord. They own the land, or rather the mineral rights, and they just collect a check, a royalty, which is just a slice of the revenue. So think about it. When inflation makes fuel and labor costs go through the roof for the miners, what happens to NRP? Nothing. They're completely shielded from that. They get all the upside of the commodity price without any of the operational headaches. It's an incredible way to turn revenue into cold, hard cash. So all this cash they're generating, it hasn't just been sitting around. For years, it's been going towards one single, focused mission, a mission that is now, finally, almost complete, to build an absolutely bulletproof, fortress balance sheet by wiping out their debt.
And man, has it been a long road. If you rewind 10 years, this whole thing kicked off. Debt was a huge problem, a real threat. But look where we are today. They are in the home stretch, with only about $102 million left to go. And now, for the first time, the finish line is crystal clear. The target is mid-2026. That's when they expect to be pretty much debt-free.
And again, management is broadcasting this with a lot of confidence. The quote here says it all. Based on our current free cash flow run rate, they are on track. That cash flow engine is doing its job, and it's going to power them right over that finish line by the middle of next year. And that is what sets up the really exciting part, the next chapter for the company.
Right, so this is the big question for anyone holding the stock or thinking about it. What happens next? Once that debt is gone, where does all that beautiful cash flow start going? Well, this is where the story pivots, big time, to returning that capital to shareholders.
And management couldn't have been clearer about their game plan. It's a simple, three-step priority list. Step 1, and this is the big one, start sending more cash back to unit holders through bigger distributions. Step 2, if the stock looks cheap, they'll step in and buy back their own units. And Step 3, they'll keep their eyes open for smart, small acquisitions that fit right into what they already do. It's a really straightforward, disciplined plan, no messing around.
And they didn't just talk about it, they put a date on the calendar. This, right here, is probably the most important slide for investors. Circle August 2026. That is the moment they expect to be able to substantially increase distributions. This is huge. It completely changes the story. NRP goes from being a fix-the-balance-sheet company to a get paid company.
Okay, let's wrap this all up and look forward. It's time for our regular segment, The Next Call, where we put on our analyst hat and give you our take on what to expect, plus our official rating.
So, our rating on NRP is market perform. Here's the thing. Internally, this company is running like a Swiss watch. They are executing their plan perfectly. But they're fighting against some nasty external headwinds in their markets, and we don't see those going away overnight.
Let's break down why we landed there. Our whole thesis is that NRP is basically just building a bridge to get to the middle of 2026. Once they get there, it's a whole new ballgame with higher capital returns. So what's our prediction for the next quarter? Honestly, more of the same. Expect that cash flow to stay strong and for them to keep hammering away at that debt. But also expect revenue to stay weak because of those soft coal and soda ash markets. The key catalyst, the real inflection point, is when that debt is gone in mid-2026. So what does that mean for the stock price? Well, we think the stock might just kind of tread water and maybe even underperform a bit until that debt is gone and those bigger checks start going out to unit holders.
And of course, we have to say it. This analysis is for informational purposes only. Please remember, this is not financial advice.